Hello everyone. I am Sandhya Bharti, Head of Editorial IT and News at Indian Startup Study. And today in our interview, we are joined by Mr. Rajiv Raghunandan, who is a venture investor and startup ecosystem leader with extensive experience across consulting, technology, operations, and early stage investing, currently leading deep tech and enterprise-led investments at Arali Ventures. Raj, thanks for joining.
Thank you. No, thank you for having me over.
So, Rajiv, before we jump into the conversation, I'll take just a quick minute to introduce you. We have been building the platform for almost 3 years now, and it's been a very organic journey, incredible journey for us. As a scientist, responses we have received over time, and we have grown into one of the trusted voice in India's startup ecosystem, like close to 6 million impressions every month across our website and social channels, and a very engaged community of 39K plus founders, investors, and operators. However, our focus has always been quality, deep insight with stories, and thoughtful conversations with founders, venture capitalists, and industry leaders. And moreover, beyond content, we are now evolving into a more network-driven platform, like one that actively connects startups with investors and enables meaningful conversations around capital, growth, and real-world challenges. So, yeah, with that context, we are really glad to have you here to Mr. Rajiv. Looking forward to our response.
Just likewise. Yeah, good to know about all the work you guys are doing.
So, Mr. Rajiv, to begin with, could you share your professional journey across consulting, operations, technology, and venture investing? Like how these experiences shaped your approach as managing partner at Arali Ventures?
Yeah, so thanks, Sandhya. I mean, like you rightly said, I spent about 15, 16 years working in the enterprise business in a variety of roles before I got into the venture investing space, right? So, my initial career, my career actually started with finance in the manufacturing. I have spent a few years in consulting, doing business consulting for multiple industries in India. And I then spent a long time, over a decade, with Infosys as part of their BPO business, building that business, playing a variety of roles within the BPO business. After which, I did pretty much all kinds of roles that you can do in an enterprise business, right? I was in solutions, did sales, did operations, ran a P&L and the like. And then I wanted to go back into early stage, so I joined a fintech startup for a couple of years. After which, in 2015, which is about 11 years ago, Arun, my co-founding partner, and I came together, and we initially set up a boutique advisory, consulting, and iBanking firm for startups. So we did that for 2, 3 years before we launched the fund, right? So I think a variety of those experiences obviously helped me significantly in my current role as a venture investor. Primary, I think, is the fact that we had spent I have spent about 15, 16 years in the enterprise business, right, prior to coming on to this side of the world. So I think that there is a fair amount of understanding of how enterprises adopt solutions, how do they adopt technology, what is the decision making process, how do you need to engage with enterprises, right, to be able to penetrate and all of that. So I think that has been the core. That's the main leverage from across the various backgrounds. Secondly, I think I worked at the intersection of operations, technology, finance in all my roles, right? So I think that ability to understand how new age technology can transform industries, transform business processes, I guess that is also what my different stints has given me. Lastly, I think thirdly, I would say talent, having just worked with younger, different kinds of people, managing them, enabling them to grow. Actually, venture investing is very similar to that, right? Because you invest into founders, you enable them at some level, and then you kind of just watch them grow, and you're around, as and when they need your support, right? So I think my experience in hiring, recruiting talent, enabling them a little bit, and then watching them grow and being able to unlock value is again been very helpful for me. Lastly, I think once you spend 20 odd years, right? It's been now a 25, 27-year career. You get to a point. I'm just turned 50 like last year. So I think the one of the indirect benefits is that you've seen cycles, you've seen so many industries grow, you've seen multiple waves of solutions. It over time makes you fairly cynical, right? And I think that is the Last benefit I would like to highlight of of all of these trends, because I think a healthy balance of cynicism and optimism is needed to be a venture investor, right? And I think that is something also that I have gained over the across my different professional states.
Which phase of your career has the biggest influence on how you evaluate startups and businesses today?
It's hard to say. I think each phase of my career has played some role, right? So I'm basically a finance person, so I started my career in finance, so that helps. In consulting, the ability to deal with ambiguity and completely new environments every month or so, I think that helps you when you deal with so many different areas, when you deal with high capability, high potential founders in these areas. And of course, my long stint at Infi, where I was selling to Fortune 2000 companies for building solutions for Fortune 2000, Fortune 5000 companies. It gave me a very deep insight into how enterprises work, right? So, and then I was at a fintech company where I built out a product, worked in tech. So I think each stint has, given me something that comes into play, and it's been beautiful, right? When the dots connect in hindsight.
Yeah, that's inspiring. And you have closely observed India's deep tech and enterprise tech ecosystem over the years. So, like, how would you describe the evolution of this field? What key shifts are making it more attractive for investors today?
Yeah, so you're right. I've watched this evolution of this ecosystem, which is enterprise tech, deep tech ecosystem, for over a decade now. Right, starting 2015, there have obviously been significant shifts. Right, there was not much venture capital interest when we started back in 2015. When we actually sat on the founders side, trying to help them raise capital from VC funds on the other side, right? So at that point in time, this is circa 2015, 16, 17, there were very few funds that were focused on B2B or enterprise tech or deep tech, right? Most of the flavor was consumer tech, e-commerce, aggregation, because India was a consumer market. So that obviously has shifted significantly. I think there are two or three things that make it very attractive. And today, that's the reason why, while we were one of the earliest enterprise tech focused funds. Today, there are many investors who focus on this space, right? I think there are a few secular drivers for that. Number one, I would say, is that talent has matured, right? Think about it, right? There are three or four pools of talent that is driving tech talent into the startup, into the deep tech enterprise tech startup ecosystem, right? One is you have big tech companies, whether it is GAFAM, Google, Amazon, Facebook, Adobe, Microsoft, Goldman. They have been all been around for 20-25 years. Cisco, right? So you have people from product coming out of there and building companies, right? Then the second pool is large Indian startups which have now been around for a decade or 2 decades, right? So whether it is Flipkart, whether it is an Inmobi, whether it is a Swiggy, which is maybe a decade old. A lot of these and a lot of B2B like companies like Mindtickle, Freshworks, Zoho. A lot of the talent comes out of these because they have seen how a product company is built. They've seen how a deeper tech company is built. Right? Gray orange on the robotics side, if you will. They have also been around for a decade. And lastly, Indian IT services continues to be a driver of talent. Right? So I think talent has matured, and you see a lot more mature founders coming in. I think the second thing is, needless to say, capital. There's a lot more capital, which is encouraging, which has allowed the mushrooming of a lot more companies. But lastly and most important is that Indian enterprises who are where you could say wary of tech adoption, or maybe about 7-8 years ago when we 8-10 years ago when we started. Today, I think Indian enterprises are very much part of the party, right? They very much realize that innovation can happen and can be created outside of their ecosystem. So most Indian enterprises across industries, right, whether it is financial services, healthcare, energy, utilities, whatever it manufacturing, right, they want to participate in the innovation ecosystem, whether that means doing pilots with small companies, whether it means doing joint development with some of them. They're very open to it, and they're also very open to paying dollars, right? Which was used to be a challenge even as recent as maybe 6 years ago, right, when COVID hit. So I think that these are the three shifts that has made it very, very interesting.
That's an interesting perspective. Then, how ecosystem is maturing and becoming more innovation. So, like Arali Ventures has startups across industrial AI, robotics, ethical AI, fintech, infrastructure, and B2B commerce. So, how do you identify emerging sectors? Okay, like what signals currently excite you? the most within the enterprise landscape?
Yeah, I think for us, again, I guess because we've spent, 15, 20 years working with, Fortune 2000 companies across 20 odd sectors, right? The ability to spot maybe opportunities comes naturally to us. In terms of what areas are most exciting today for us is, we stick to our core areas, so I think if you look at our areas of investment, there have been we started with about 3 areas, we've expanded to about 5 or 6 areas, right? We've not actually invested beyond all that because we stick to our core. We believe in consistency. I think if you ask me today, what are some of the most exciting trends? I am very excited with health tech, right? We have done 2 or 3 investments in health tech, not that many, but I think going into, over the next 2 to 3 years, you will see us investing a lot more in health tech. The quality of entrepreneurs that I have seen over the last 2 years secularly has gone up. That is an ecosystem that you can argue was relatively nascent. Indian tech entrepreneurs have exploded over the last 20 years. If you talk medtech devices, if you talk biotech, life sciences, right, that you're starting to see entrepreneurial activity over the last couple of years, right? So that to me is very exciting. The other one is the whole industrial tech, physical AI space, where we are early investors on back in 2019 in companies in robotics at the intersection of hardware and software. That again is an area that has evolved rapidly with the evolution of AI models, with lowering costs of hardware. I think people are able to do things in the physical AI world today that was not possible even 3 years ago. So I think, yeah, these two areas are very interesting for us.
Okay, so are there any sectors that you believe are still underfunded despite having massive long-term potential?
Yeah, see, I think the industry always goes through cycles, right? So, for example, even 3 years ago, you could argue that industrial tech it was underfunded, right? Today, you have tailwind in physical AI and robotics, right? So, a lot of companies that are in robotics are getting funded today, which wasn't even there 2, 3 years ago, right? But even if you expand the physical AI space into a wider industrial tech umbrella, we believe that there are pockets of opportunity where you leverage AI, new age hardware, and apply it to old business problems in traditional industries. We think that is a very exciting area, which you could say is underinvested, possibly because these areas are boring, right? So some of the best entrepreneurs may not want to build solutions for them. Some of the venture capital investors also, this might seem a very boring area. The TAMs may not be as large and maybe as obvious, right? So I think that to us is an area of opportunity where it is non-obvious, right? And there are solid founders with experience who are building solutions. And I think we are taking early positions, just like how we took early positions in robotics and industrial AI in 2019 and 20. Today, you're seeing an explosion of capital. So I guess as seed stage venture investors, our focus is to look at areas that can build solid businesses that can that are global in scale, but also is not very crowded at this point, but we know that in 3 to 5 years, capital will.
And your recent investment in Flow Mobility, like Arali Ventures, it was in physical AI and robotics for industrial use cases. So, like, what made construction robotics a compelling opportunity, and like, how do you see AI-led automation transform traditional industries in India?
Yeah, no, so this has been a big part of our playbook, right? Industrial robotics is not new to us, or physical AI is not new to us. We were early investors in our first fund, right? Back in 2019 and 20, we invested in two companies. One is this company called Seinler, and the other is this company. We led investments in Seinler, co-led investments in Seinler, and co-led investments in Unbox Robotics, right? Unbox Robotics today is, close to 100 crore revenue company, global in scale. Right. What they were solving for is parcel sorting in last mile parcel sorting in warehouses. And we have since then expanded this into multiple such vertical robotic use cases. We've invested in this company called Harvested in agri robotics. We have this company called Jidoka that is using that does high speed image recognition for quality control, and more recently with Flow Mobility, right? So if you take a step back, Sandhya, if you look at the global landscape, you have general purpose robotics where there's a lot of investment going in, which has kind of gone crazy over the last year and a half, which includes humanoids and RFMs. But vertical robotics, which is robots with very specific industrial applications, has seen a secular growth, right? We are indexing on vertical robotics. We believe specifically for the Indian market that is there is a compelling value proposition. Very specifically on flow mobility and construction, like it is in other industries like agri, the business case or the reason for our investment is driven by two or three factors. One is labor continues to be quality labor with productivity continues to be scarce. If a business has to build a reliable, predictable solution, the technology needs to come in to be able to augment that. And secondly, in a lot of these traditional industries, there are people looking now at digitization. There are people looking at AI and how technology can transform some of their traditional business processes. So there is a bit of a tailwind. And lastly, like I said, with industrial tech, the whole ecosystem in the last 3 to 5 years has transformed. Right, costs of hardware components has continues to go down, whether it is cameras, sensors, lidars, or whatever. The evolution of AI models has made things possible that what a company might have taken 5 years, today they're able to do it in 2 years, right? So capital has become a lot more efficient. So I think, yeah, I mean, we are big believers in industrial tech and physical AI, and we have been consistent investors in this space. It possibly is one of the largest portions of our portfolio.
It's fascinating to see investors now looking beyond software only models and towards real world industrial applications of AI.
Yeah. No, that's a good point. It always brings a smile to my face because when we came into the industry in 2015, 16, and 17, we used to be told by venture capitalists that VC funds, right? Because we would sit on the other side with founders saying that if it is hardware, it is hard to scale, and I don't want to invest into hardware, right? Nothing much has changed. These are businesses still hard to scale. It takes 4 or 5 years before you get to material revenue. But we always used to think that given we had spent 15 years in the industry, we felt these were good businesses solving very deep problems, right? And I think that's where we have backed them, and we're seeing companies reach scale in that space.
So many startups today are operating in a far more disciplined funding environment compared to previous years. So how should early stage founders think about fundraising, capital efficiency, and sustainable scaling in the current market?
So here's the thing, right? At Arali Ventures, we've always had a very strong view on this. There can't be two ways of running a business from a capital efficiency perspective. If the market is capital rich or if it is capital starved, there's only one way of running the business, right? You've got to run the business in a capital efficient manner. Being a B2B focused fund and being a smaller fund relatively, our first fund was a 50 crore fund, second fund is a 270 crore fund. We have always focused on building a business where the underlying business model is cash flow profitable, right? When we invest in the business, obviously they're pre-revenue and sometimes they're even pre-product, right? But if the founders and the company builds out what they're setting out to build, then one doesn't have to search for how cash flows will get generated, right? So that's been a feature of our investing. Secondly, all our companies kind of focus on capital efficiency, on building in a frugal manner. In some sense, you could say that is very cold to B2B. Some of our founders also, so I think they focus in a frugal manner. Capital efficiency in B2B is inherently higher than in the consumer space. Lastly, a lot of our founders are people who have worked anywhere between 8 to 5 to 20 years in the industry. We do have a few companies where you might have 25, 26-year-old founders. So mostly our founders are 30 plus, sometimes 40 plus, right? So that inherently means they have P&L experience. They know what it means to run a cash flow. And in some sense are not carried away by the latest fad of the day. So I think all of this combines to make for a very sensible, pragmatic way of running a business. And we've always believed that there's only one way of running a business, right? Just because the world went crazy, the venture world went crazy in 21 and 22, it didn't change the way some of our businesses operated. It didn't change the way that we looked at some of our investments.
What is some of the common mistakes founders still make while raising their seed or pre-series?
I think there are a whole bunch, right? I mean, I don't know if I can call them mistakes. The reason I'm thinking is one can't say whether it's a mistake or not, but I think certain misalignments that happen is one mistake because of which I think people end up not raising is focusing too much on the technology as opposed to the underlying business problem. Right. And I think that when the focus is so much on tech but not on the business, I think they may still get funded, but I think they then get funded for the wrong reasons. And that could, in the longer term, cause issues, cause heartburn between the investors and the founders. Right. The second thing I think is being very fixated to the initial vision. Right. You raise capital with a certain vision. As founders, one have to be flexible. One has to be able to listen to the market, listen to key advisors, investors, whatever. So sometimes if you're very fixated and wedded to the original intent, right, and are not willing to let go, I think that does become a challenge. The third common mistake you see sometimes is that you founders who, in some sense, are you play into the gallery, right? Which means, talking about what an investor would like to see, whether it is in terms of a market size, whether it mean in terms of pace of scaling of the business. I think that's a big mistake. And, normally investors should be able to see through that, but sometimes they don't. And, it results in an investment, but, it sets the partnership off, a very wrong foundation, right? So I think some of these are mistakes, but some most importantly, some of these result in misalignment over a longer term, which is very harmful to the company, investor, and all stakeholders.
And since Arali Ventures has invested in companies such as Finbox, Unbox Robotics, Weavestate, and Singlet. So across these portfolio companies, what common founder qualities or business fundamentals stand out as indicators of long-term success?
Right. So I think I'll talk about four things, right? Four common characteristics that we look for founders. And this has been a learning, right? If you had asked me this 6 years ago, my answer would have been different. So the answer has gotten more refined. I think understanding of the business and passion for the underlying industry or business, that is a common characteristic, right? Because if you look at all our founders, they're very driven by that particular problem statement, that particular industry, that particular business. And that is enough to drive them. They don't need any other motivation beyond that. Company success doesn't matter as much as solving for that problem or being in that space every day. Secondly, I think second characteristic, ambition, vision comes with understanding of the business. Ambition comes from saying you want to be able to make a big impact. That is very much important for you to be able to generate blockbuster returns as a fund. So I think that vision and ambition is very important. Three, flexibility. Like I was saying earlier, sometimes you can't be wedded to the original intent. You got to keep changing the product, keep changing maybe even your market focus and the like. And lastly, flexibility is important. Lastly, I would say the fourth and last point is execution hustle, right? One has to keep moving forward. One has to keep make some assumptions, roll the product out, go into the market, get some learnings. But you got to keep moving forward, right? And you need to have the hustle to make some compromises, get people on board. So yeah, these four I would say are the topmost characteristics that I think are early founders or the solid founders exhibit.
Yeah, these are great characteristics, I will say. So do you believe India's next wave of large startup opportunities will emerge from AI for businesses or from companies solving deep infrastructure and industrial challenges?
Well, I don't think it's an either or question, honestly, Sandhya. I think the big companies, I'm a B2B fund, right? So I don't do consumer AI. But I think AI first businesses that provide deep business value for industries or for businesses is where that's where the next wave of businesses, next wave of large category creators are going to come from. I think AI first is a given because this AI has rewritten some fundamental assumptions, right? So if you're today building a health insurance business, right? And I know of a health insurer that is just launching out. It's an insurance company, right? The way the way they will staff and think about every function today is very different from what they might have 3 years ago, right? So I think AI first is a given. From our perspective, the focus has to go beyond the AI. The thing that hasn't changed is the focus on the problem and the focus on the business value, right? So at least our lookout will be, yes, AI first, but continuing to solve for business problems and delivering deep business value. It could be for traditional industries. It could even be for new age industries.
And finally, what advice would you offer to the first-time founders building technology-driven startups?
It's hard to give advice to founders. I think they are extremely capable folks, very talented. I think the only thing that I my experience, right, has been with some of our founders has been that focus on the business problem, focus on getting a deep, like I said, when you ask me about characteristics, right, deep understanding of the business and a deep passion for that industry and the business. If that is there, right, then founders will always figure out how to create value for themselves and for that industry, right? Whether the landscape changes, whether regulation changes, how AI disrupts, yes, all of that they'll be able to deal with, right? I'll give you an example of one of our investee companies called 50fin in the fintech space, right? In the fintech infra space. So there's been a lot of changes, not just AI, but on the regulation side. But I think the deep passion they have for that business and for the understanding that they have the business will always hold them in good stead, right? And I think that's where, founders like that give us a lot of confidence.
a wonderful note to wrap on, Mr. Rajesh. Thank you for sharing your valuable perspectives on deep tech industry, enterprise innovation, and the evolving dynamics of India's startup ecosystem.
Awesome. Awesome. Thank you very much. Appreciate you doing this. Thank you.